Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FXPesa. So today we'll be having a very special session about the financial market outlook for the fourth quarter of this year. And at the same time, we'll be sharing some insights about the just concluded US elections. And on top of that, we'll be doing some technical analysis to try and understand the current market structures. So I'll be joined by Nadia, a senior market analyst at Equity, which is the group company that owns EGM Securities as well as FXPesa brand. So welcome, Nadia.
Thank you, Rufus. Good to be here, guys, and can't wait for the insights that we're going to share together.
Awesome. So first things first, I would like to air a disclaimer that this particular session is not investment advice. It's not a recommendation to trade. So as usual, always do your own due diligence and practice proper risk management. So let's begin by checking out the market outlook for Q4, and then we try and understand some of the insights that had been prepared earlier. And then we see what we got right, what we got wrong, and what may have changed in the markets right now. So to anyone watching, the full report is available on the comment section. If you're watching this on X, I don't know if you can access the link, but it's available on the YouTube comment section. So you can check it out and you'll be able to go through the full report. So let's jump straight to it. So as you may all know, we have had quite good performance in Bitcoin. I believe against the dollar is up over 60% year to date. And the price of Bitcoin has been stuck in a 7-month range since the halving around the month of April. We haven't had much of a big trending price action. But in recent weeks, we have seen quite a strong rally with Bitcoin hitting a new all-time high yesterday after Donald Trump emerged as the leading candidate. So, what are your views on this, Nadia?
So, since the beginning of the year, we've kind of analyzed that Bitcoin could definitely reach 100K or more, given that Trump is like the elections were coming up and Trump highly supportive of Bitcoin because he wanted to get the maximum votes. And he's a big fan of deregulation because he wants to benefit companies, he wants to benefit investors, and he's a businessman on the side. So I think this is what attracts him the most in terms of risk appetite, and investors get more risky, they want to take more risk, and he kind of launches this. So in the Q4 outlook, obviously before the elections, this was written. Wanji, can we share the chart, please? I wanted to explain why our analysis for reaching 100K was there and what happened when we were dropping below 63, and then we hit that jump and we created a new record high. Obviously, yesterday was a crazy day for markets. There was record highs for the S&P, for Bitcoin. The dollar had its biggest single day gain. So there was a lot of shift in sentiment, but it was all projected. So if you look here at the Bitcoin chart, we can see that we tried to break the level of 70,000 multiple times, but we couldn't. And the reason for that is obviously we broke the 75 in this week, but at the time of writing the report, Bitcoin was stuck at 63 and it was unable to break levels of 65. We obviously broke that, and we've also broke 75. This is like $10,000 that we were able to achieve during just the Trump elections. And as soon as the elections, they've hit headlines strongly, and Bitcoin found enough momentum. But if we look at the cycles that Bitcoin moves in cycles, first we had when we were at 56, the first drop, which is the first green line. We dropped to 56, and then the second drop, we dropped to 54 and then 52, and then it was expected that we drop to 50, because at every cycle we create a new high, a lower high actually, if you can see in the top lines that we've highlighted. So we create a lower high, but we create a steeper low. So that's why, so if you can see, the highs are like this, and the lows are also like this. Analysis, we have to hit a lower low, but we weren't able to do that because fundamentals, they took over the technical analysis for for this bull run. But initially we had to break below the $50,000, and then we could go back up marginally higher to the above 70,000, but we skipped that. We only dropped to 63, around that area, and then we went back up. So I believe that the bull run can continue. A necessary correction that I thought was going to happen did not take place because fundamentals were strong enough to support the Bitcoin prices, especially as Trump won, which was the catalyst in markets that we have something really big happening in the markets, and that's when fundamentals change things. When we have a Federal Reserve meeting, when we have elections, or when we have key economic data like the non-farm payrolls, these are all fundamentals that affect the price action, that suddenly on the technical scale things may take more time to form. So the formation for the one, two, three, four, the formation of the fifth hitting a low below the 50,000 wasn't achieved just because the fundamentals supported. Now we can go back to the outlook, Wanji.
So, Nadia, I have a couple of questions on that. What do you think about the ETF demand from especially the US ETFs? And of course, the correlation we are seeing where yesterday the Dow Jones, the Nasdaq, SP 500, as well as the Russell, all hit a new all-time high in correlation with Bitcoin. Are we going to see a separation, or this is going to remain a strong correlation going forward?
So I think market consensus, the biggest thing that we were betting on in the market was a stronger dollar, and versus a stronger dollar, everything else could go down except the major indices, because Trump's policies, as I said, supports deregulation, and deregulation supports stocks. So we saw that the Dow Jones hit an all-time high. We saw that the S&P as well broke record highs. Also futures, even before starting the session, we had futures hit record highs, and amid a stronger dollar. And the only loser we had yesterday was the euro and the gold. I think a continuation of the bull run for major indices is very likely to continue until we get negative data. Negative data will only be the new catalyst. Like I said, fundamentals are the only thing that can stand in the way of this bull run, because a correction is definitely necessary, but on a technical scale, it's not enough without fundamentals to be triggered. We need something really important to trigger a sell-off, which is the retracement that we've all been talking about, or the 5 to 10% that needs to happen so we can continue back a healthy bull run that is not impacted by different points and basically record highs that don't make sense. But right now they do make sense because markets are highly optimistic because of the Trump win, because we still have good economic indicators. We have rate cuts on the table, and earnings are so far good. There's a lot of big banks, there's a lot of tech stocks that have achieved better quarterly reports than what we saw in the previous even quarter, despite having a higher interest rates and despite having sticky inflation. Companies are doing well, and this bull run is supported mainly because of these of the earnings and of the rate cuts. So as long as we have these two on the table, nothing can stop the bull run except uh, a very big trigger in the market, which is negative data.
Awesome. So just to highlight to our listeners, the chart of Bitcoin, this was the strong rally that happened in January through February. We got into this range and eventually had a breakout towards the end of last month. So the breakout hit a new all-time high around 73.5. We had a pullback that lasted about 5 days. And then from there, in the last 2 days, we have had quite a strong momentum higher. hitting a new all-time high of 76,374. And now we are looking at a potentially new leg. So as per the projection, here we are looking at potentially the price of Bitcoin carrying all the way up to 100K. And this is within the time range of around the end of the year. So the other highlight we have seen is the SP500 making a very strong comeback yesterday. And from a daily time frame, you can already see that we were able to break above a new all-time high. So it was similar thing for all top US equity indices. This is the Russell 2000 index or the small cap index. The US 30 or the Dow Jones also hit a new all-time high. So I can clear this just so that the chart is clear for everyone. So this was the previous all-time high, and we managed to break this yesterday. And now we have the Nasdaq also forming a new all-time high. I believe the Nasdaq was the slowest to form a new all-time high. So looking at the outcome of the US elections in relation to what's currently happening with the equities, what do you think is the biggest promise, especially after Trump won the election, and at the same time we also got majority control in Congress? Hi Nadia, can you hear me?
Yeah.
Yeah. So I was asking your opinion on the Trump election win and in relation to the new all-time highs in the equities in the US.
So I think that I've also read a few questions if the bull run will continue, especially for the Nasdaq. So today we have the federal rate decision to cut rates by 25 basis points. This could support major indices, and it could also support gold prices a little, but I'm not sure is it enough to support gold prices or not. We will talk about gold in a few minutes, but first to discuss the bull, I feel there is enough momentum in the market to still continue the bull run, especially as Trump won. And as I said, all his agenda, whether it's tax cuts or deregulation, it will impact businesses in a positive way. Why the Nasdaq took its time to actually hit a new record high was because Trump's tariffs are going to increase on China, and a lot of technology companies they import the AI material, the GPUs or whatever they use in the technology sector from China. So increasing the tariffs will increase the costs, and therefore it will affect tech stocks in a not so positive way. But I'm sure that they will find solutions. But tech stocks could be still under pressure, especially as already AI getting all these AI materials, the GPUs, it's already very costly. And there's so many investors who invested in the AI hype and yet to see a return on investment, especially other companies than Nvidia. So Nvidia is today it was announced that it's the largest company in the world, taking over Apple. So there's a lot of other companies that are working on the AI, but they still yet to see the return on investment. But for Nvidia, obviously, it's very clear that they have seen the return on investment. But we saw a little bit of correction in the summertime, which is why we saw a drop in the Nasdaq as well. But I feel
Well,
like the bull run is very possible to continue. Yes.
I feel like Nvidia has some form of cult-like following. In the last earnings report, I think this is when we had a watch party for Nvidia earnings, and I felt like that was quite obsessive based on the way the company has been performing over the last couple of years. And at the same time, the stock keeps going up. Whenever we get a dip, investors have just been driving it higher and higher. So
Yeah.
is the Nvidia rally and the entire AI boom
So
going to?
So Nvidia is definitely overbought, which is why they did a stock split a couple of months ago for investors to buy at a cheaper price, and they have, and people are still buying Nvidia. So I believe like it will continue to go up unless they will be slammed by like what we've seen in Apple, what we've seen in Amazon, all these lawsuits that get stirred up because of them not following the proper regulatory movements or whatever. This is the type of thing that can burst the bubble. But unless we get all these fundamentals and things like that, then I think that the bull run is likely to continue because we need such companies in our life now, especially as the trend moves in favor for AI.
Awesome, awesome. Thank you, Nadia. So I think we can jump right back into the outlook and now check the commodities markets.
Yes.
Shiko, can we share?
I think you want commodities, right? It's page 10. Sorry, 9.
Perfect, perfect.
Yeah, 8.
So we have seen a lot of changes, especially in the oil markets outlook, especially after the OPEC countries mentioned that they are looking to expand production. This would be the first time in a span of 2 years where we are looking at OPEC countries increasing production. We saw Saudi Aramco missing earnings. That was last week. And now, at the same time, the US has a new president who is less invested in promoting green policies and is more focused on removing those EV directives in the US economy and most probably looking to promote sufficient energy production, especially for fossil fuels. So, what do you think about the outlook and where we might be headed next for crude oil?
So for crude oil, I just want to open the chart for myself when I'm talking about it, just so I can see the movement. So on a daily frame for WTI, we've been in a sideway movement, particularly because um, we've been seeing a lot that OPEC Plus wants to increase production after 2 years of cutting 2.2 million barrels per day, which is their cutting production policy that they've been doing to stabilize oil prices. You open the daily frame for WTI.
Yes, this is Brent
So,
oil.
yeah. And the fact is that we have, even though we have geopolitical events going on in the Middle East, there's a lot of supply in the market, especially from the US. The US wants to produce more. They want oil prices to be cheaper. They don't want the American citizen to spend so much money on oil. It doesn't make sense for them. So they produce as much oil as they want, and they don't have a limit for that. And then OPEC Plus came and they were like, okay, we're going to cut production from our side, which is why oil prices were stabilized. But then they were like, okay, there's a few OPEC Plus members that want to increase production because this is how they profit. So they're going to increase production. And that's when we saw the sharp drop on oil prices, where we hit $64 for WTI, and this was in a span of just a few months, like literally from July. In July, we were around $80 a barrel, and then we plunged all the way to 64 in September based on these decisions, and also geopolitical tensions were supposed to lift prices, but they failed to do so. So there's a lot of pressure on oil prices, especially as Trump takes over, although he's not into green energy and he's a classic kind of guy, but he still doesn't want the American citizen to have or face difficulties in paying for oil prices, which is why it's going to continue to be under pressure. However, the decision to delay increasing production, which was supposed to be due in December, and they delayed that, I don't think the delay is enough to push prices back up to $80 a barrel. However, it might give oil prices a little bit of a boost here and there during these next 2 months, but the decision itself will really pressure oil prices, and we're going to see the $64 again once they actually increase production. Oil prices are going to slip away, in my opinion.
Interesting. There's this idea that during this period when the OPEC plus countries were cutting their oil output and the US was expanding its production, the overall outcome was that the US grabbed a much bigger market share of oil exports in the world. And now the OPEC are feeling like they're missing a bigger or a significant proportion of the market. So are we headed into an oil price war like we had in March, April 2020?
Let me check. So I think the last time we saw this, the highs that we've seen, the last time that we've seen like over $90 a barrel for WTI, it was in September 2023. And then it got boosted even more at the start of the Middle East tensions. Fear that there will not be enough supply in the market. But I think the past year has proved that we do have enough supply in the market, which is why it's not supporting oil prices anymore. I believe $64 a barrel for WTI is very possible, but it will be very relative to OPEC Plus decision to increase production. So the more we get closer to us having OPEC Plus increase production, let's say it's going to happen in January, so maybe the last week of December we could see prices tumbling down. But so far we have a few things that are supporting prices a bit. So I think the sideways range is definitely going to continue for, because oil is right now affected mostly by fundamentals, and that's why we're seeing the sideways range.
So on the geopolitical side, I remember there was this time when there was instability around the Red Sea and a lot of vessels could not move across the Red Sea. And at the
Yes.
same time, the market was pricing in a premium due to the conflict happening in the Middle East as well as Russia, Ukraine. So, with Trump winning and promising to end both wars, is there a likelihood that this premium will be eliminated in the markets?
I think so. I think that he did promise that he will end the war, but will he actually? We need to see action before we see the. I mean, yes, for oil markets we price things ahead of when they happen. So he has promised that, but we still didn't see any initiatives like, is he going to speak to these leaders? Is he going to promote a campaign? So these things will heavily justify the direction for oil prices.
Awesome, awesome. So I think now we can move to gold. I can already see comments about gold in the comment section. So gold, fun fact, is one of the most traded assets by Kenyan, Ugandan, as well as Tanzanian traders. So
As
so
well
far we
as
have enjoyed.
UAE.
Oh, awesome.
Yeah.
Interesting. So, gold has been one of the best performing assets of the year, being up about 35% since the year started. But then, after the announcement of Trump being the leading candidate, we saw a big sell off of about 3.5% yesterday. So,
Hmm.
is this an overall market change in terms of a trend, or are we going to see gold resuming the bullish momentum?
I think that the retracement to these levels was definitely necessary, and we said that on our equity webinar 2 days ago that we will visit 2,650 because a retracement is necessary for the bull run to continue, and their projections are that gold prices will reach 3,000 by next year. But and if we want to reach 3,000 next year, we do have to correct. And today's movement will definitely be buoyed by the Fed decision to cut rates. I'm just not sure it's going to be enough to push prices to 2,750 and above. I think right now we need to see a little bit of under pressure gold prices or a sideways movement, but also visiting 2,600 is very likely, especially if Powell, for example, says that we're not going to see any more rate cuts in December. November will be our only rate cut, and then it's still next year. Something that is kind of a negative sentiment towards rate cuts is likely to put prices back under pressure to 2600. We can visit this area again because we have a very important key support there that we tried to break below the 2605 area before multiple times in October, and we didn't. And then the bull run continued from there based on rate cuts and different and Middle East tensions and the fundamentals that supported prices, but also it was a safe haven amid political uncertainty. So the only way that we can see gold prices continue this rally is we don't have political uncertainty anymore, but we have uncertainty towards Trump's policies when it comes to war, when it comes to tech stocks. So I think this could possibly push prices back up, but I think it's just going to be under pressure in this period, especially that when gold is down, it's like down.
Yeah, it was quite a big sell-off yesterday, and
Yeah.
I think it was quite surprising. But the overall long-term trend seems to be strongly bullish, even after the big sell-off yesterday.
Mm-hmm.
So, moving on to the next part, let's talk about currencies. What do you think about the JPY economy and the current policies and the new leadership?
So the USD JPY has been it recovered since hitting the 139. Now we're at 153 because inflation. This was after inflation in Japan proved to be low. So Japanese, the Bank of Japan, they need to hike rates. When they hike rates, then the Japanese yen it grows stronger. But the fact that they are unable to hike rates, and the new prime minister had already said a couple of times that they're unable to hike rates, um, based on the fact that inflation is very low. Japanese, they do not consume like the American economy. It's very different than the American economy. They have very low consumption levels. And so CPI will continue to flatten and continue to be lower. And this is why they either need to intervene for the yen to rally again, like we saw, and it hits 139 again to visit these levels, or at least 143. But without a Bank of Japan intervention, we are not able to see these levels again for the Japanese yen, also without a rate hike. The moment that they start announcing a rate hike or any kind of intervention that would support the yen, then we can talk sell on the USD JPY. But for now, it's definitely long amid a stronger dollar and a weaker Japanese yen.
Thank you. I agree with you on this one. Since the Bank of Japan literally just said they are not able to expand the rate hikes, we have seen the yen continuing to lose to the dollar, and now it's almost getting back to the previous high. So far, unless there's any form of intervention, I think the bullish run might continue. So, Shiko, can you share the part about the yen on the outlook? Awesome. So this is the part where we were covering the yen on the outlook. A lot more things had not happened. I believe we didn't have the 50 basis point rate cut from the US then. And so
This
far,
is the
what we are
yuan.
seeing,
Yeah.
yes, yeah.
Yeah.
So, oh, sorry, this is the yuan, not the yen. They're kind of similar.
Yeah.
So we're looking for Japan.
Japan is after the Eurozone.
Yeah.
Yeah.
So while we load, I'm checking on to see if there's any questions on the comment section. So there's a request to comment on the pound yen. So we'll be covering that.
That's your thing, Bank of England.
Yes, yes. So charts and the correlation of the DXY and the dollar pairs this week. We'll be covering that too. Awesome. So this is the page where we talk about the Bank of Japan was eyeing a quarter four interest rate hike. So after they got into the new elections, they had a complete change of policy. So after the overall expectation where we were expecting to see progressive rate hikes in Japan, they mentioned that the economy cannot be able to sustain that. So as a result, they chose to maintain rates at the current level of 0.25%. So following that, and now that we are not expecting any more rate hikes from the yen this year, we saw a complete reversal where earlier gains in the yen were already lost, and we are seeing the strong currencies making some good gains against the yen. So far, the pound has been the strongest against the yen, whereas the dollar has also been gaining against the yen. So just as we analyze the USD yen, pound yen is also strongly bullish. So in combination with what we have seen with the Bank of England, there has been quite a number of developments. So one, later this afternoon at 3 p.m., we will be expecting an interested decision by the Bank of England, where it's expected to cut rates by 25 basis points down to 4.75%. But then later in the evening, we also be expecting the Federal Reserve Bank of the US to be cutting rates by 25 basis points, which would put them in a range between 4.5% and 4.75%. So if both events happen, then that particularly means that the Bank of England still remains with much higher interest rates compared to the US, which will likely translate into yields, where we could be seeing the UK over the long term having much higher yield compared to the US. So there's a strong likelihood that we could be seeing the pound strengthening. And when you combine this with what happened on the 30th of October, where the UK proposed a new budget where it's looking to raise taxes and at the same time increase spending, especially for the health sector. We are seeing a potential fiscal tightening as well as a monetary policy tightening because interest rates are still relatively high, and this could potentially make the pound get some strength overboard. So when you look at the pound USD, and I'll try to share my screen here. Just a second. So my charts can be noisy sometimes, so I try to clear them every time I get a chance. So this has been the overall chart of pound USD on the daily. So overall, we've had this momentum. I would say right from the start of the year, the sequence of highs has been getting higher. And also, if you compare the sequence of lows, it has also been getting higher. So over the last course of 4 weeks, where where the dollar has been pretty strong, it has also gained against the pound tremendously. And last month was pretty clear that the dollar was the king in the market. But now we are seeing chances of the dollar giving back some of the gains, and this could be a potential foundation for a strong rally in the pound. So from the forward chart, you can see it has been more of a channel with progressive lows for the pound against the dollar. But then we could be seeing a key turning point, especially this afternoon, after we get news from the Bank of England. If they promise to go steady, as they have been doing with the rate cuts, then that could boost the pound. But if they get aggressive with the rate cuts, then that could be negative for the pound. So I tend to believe that this is a key level decision point for the pound, around 1.2888. And we could be seeing a strong directional moves, either bouncing from here, going right back to the previous high. And if they decide to get aggressive, then we could be seeing the market now taking an overall new direction. What are your views on the pound, Nadia?
I agree. I agree with everything you said. To be honest, let me just open my chart. So we've been tracking a downtrend after hitting, 134, I think was it, or yeah, around this area, 133, 134, but we were unable to break above 135. This was supported by the fact that the Bank of England did not raise rates in the meeting that they were expected to after a couple of rate cuts. But because they have recession fears and the UK economy as a whole, along with the Eurozone economy, they're not doing well. The Euro zone economy even worse, and the slump is really affecting both the GBP and the euro. I think the euro is one of the biggest losers yesterday, but I think today's movement for the GBP will definitely be influenced by the Bank of England decision and any like statements that they say, because I think this is the most thing that actually affects the currency. Because last time, the eurozone, they did cut rates. The ECB, they cut rates, so a lot of clients were selling, and then the Lagarde, she stated that, we're doing everything we can, and we might not cut rates next time. So this kind of gave optimism to the markets, and the euro actually went up because also the dollar was down. So there's a lot of things to focus on, especially in the statements post the meeting, more than this decision.
Awesome, awesome. So we've got the yen, the pound. Uh, I think we are just moving around the elephant in the room, which is the dollar. And it was quite surprising seeing the big rally happening yesterday, especially in the expectation that Trump might win. But at the same time, we are seeing an FOMC rate decision happening this afternoon. What are your projections on that?
I think we're going to go for a 25 basis rate cut, which might impact the dollar to the negative. They're going to cut rates. But I don't know if markets are going to shrug that off and still continue pricing in a Trump win. That's also a very possible scenario, because the Trump trades have been taking place since the day before the election results, the Trump trades, and I just don't know the timeline or when this will stop. So that's why I continue to say the gold might continue to be under pressure, and the dollar might continue surging despite the 25 cut. Powell may come and say some hawkish remarks, and everything will just go back to track.
Interesting. From what I'm seeing from the CME FedWatch tool, which basically shows the probabilities of FOMC rate moves. So far, the market is pricing in a 25 basis point cut with 97.5% probability. So this is almost guaranteed. So does this imply that the rate cut is already priced in, and perhaps traders should focus on the FOMC press conference?
Um, Market consensus for the SME FedWatch tool is always almost 99% accurate all the time. So I do think that we're going to see the 25 basis rate cut. I'm just not sure about the market movements after. Just like, because I said, like, despite the rate cut, which might see a drop in the dollar and might see an uptick in gold prices, but the moment Powell comes and the moment he reiterates what he has to say, and if it's hawkish, then it's going to support the dollar. So I think we're going to see a lot of volatility today. It will be quite crazy in the markets, because there's two things that we're pricing right now, not just one thing. It's just not the Fed week. Like, usually when we have a Fed week, it's like the whole week we're pricing and what's going to happen. But now we have the elections and the Fed decision. So, and don't forget that the previous NFP, which was 12,000 jobs only, was influenced by the hurricanes. And I think that's what Powell's going to say, that, and he's going to downplay the fact that the labor market was largely hit last month, this month. So I think that I just feel like the Trump trades will to continue ongoing.
Awesome, awesome. In Kenya, we have a lot of traders who like participating, especially when there's news, with key focus on the FOMC press conference. What would you advise a trader who wants to participate in the market right after Jerome Powell says good afternoon?
For me, personally, I would follow the trend. So I would definitely read market consensus if I see, because initially after the cut there will be a sharp move, right?
Yeah.
The sharp move, it's very hard to enter the market then. Even your order, if you place it, let's say at 650, it might be already 620 and you still didn't place your order. So I think it's a very tricky to enter the market right after the cut. I think if investors are super risky, the traders are super risky, they can bet from before the decision just so they can follow the trend, which is considered a very risk move, but it can actually work out in them if their projections are right. But it's very tough to enter the market when it's when there's news happening, because there's always like a sharp move and then so that can liquidate accounts if the accounts are small. But if your account is big enough to handle all this volatility, then why not?
Yeah. Interesting. So, personally, I feel like this entire move that happened yesterday was more of a Trump signature move. But then the markets might be going back to normalcy, and now investors might be a little bit, I would say, objectively thinking about the factors impacting the dollar. So far, we're already seeing some currencies regaining against the dollar after the big move yesterday. Of course, there's a big retest on the dollar index at around 104.431. So at the same time, if you look at other currencies, especially the Asian ones, we have seen the market completely reversing everything that happened yesterday. So for Australian dollar, I would say it's a pretty strong currency. So if it happens that the dollar is weak after the announcement of the FOMC rate decision in the press conference, then this might be a likely candidate to be participating in, especially considering that it has already erased all the losses it had made yesterday. So it's also similar with the New Zealand USD. So it's more like the Asian pairs tend to be the ones gaining momentum this time. So for New Zealand USD, it hasn't completely erased all the losses. So we could be seeing the market making full recovery. And if the news weaken the dollar later in the afternoon, this might be a likely candidate to be observing with a likely position where the market now engages in the opposite direction. So for the euro, I am not so confident. It seems to be one of the weakest currencies in the market. Of course, the big move yesterday was considerable, being down about 2.28%. So if the dollar happens to strengthen after the news, likely candidate to trade it with would be the euro, given the monetary policy and at the same time the overall weakness that we have been seeing over the previous couple of weeks. So on to the next currency, Canadian dollar. What are your views on the Canadian dollar, given what's happening with oil prices and their monetary policy?
Let me just open my chart. Sorry, guys, the chart was not open. So we saw a slid this morning on the 4-hour chart as well. We can see that it's highly affected by obviously yesterday it went back up, followed the direction of the dollar, and today it's hikey very down. If we open the 4-hour chart, we can see that it's an uptrend, it's following through, and I think it will definitely be more affected by the Bank of Canada decision. But I feel like it's tracking the dollar's gains, the Canadian dollar so far, and it's one of the strongest currencies out there right now.
Awesome, awesome. Personally, I've been following it quite closely, and I think it's a key decision point, given the number of times we have seen it swinging at these levels. So we have had quite a number of times that the USD card pair has bounced from these levels, and all we are seeing since the market got to that area is signs of bears coming into the markets. However, when the week started, we had a gap. For those who have been following closely, we saw this gap happening in the markets. The gap was not yet closed. So that even if we saw the market making a big drop for 2 consecutive days, yesterday we managed to close that gap with a strong momentum upside. And now it seems like the market is making that final turn. So could we be getting a swing trade right from these highs?
Yeah. Why not? I think today it will also be impacted by the dollar's movements and the Fed
Yes,
decision.
absolutely.
Yeah.
Anything we have missed? I think we are approaching
I,
the end of the presentation.
yes, I think we've answered everyone's questions about all the different classes, and I think that the Fed decision today will have a big impact, especially Powell's speech.
Awesome. You're getting.
Thank you, Joseph. That's very sweet.
So just checking the comment section to see if we missed anything. What does this indecision mean for the euro pairs and the pound USD? Want to take on that question?
I think I'm not sure what indecision Davis or Davis, I don't know, is talking about, but I think that the euro will continue to be under pressure as long as the dollar goes back up, and as long as yeah, today we will know the kind of direction that we're heading towards, but it seems like it's an uptrend for the dollar. We've hit 4-month highs. Trump trades are happening, and remember, the end of the carry trades had the hugest, like huge catalyst for them to end. So I think markets are following a trend right now, which is the Trump trade, and I think that we should follow the market trend.
Awesome. So I will answer this one from Marco Kello. There was a mention of time change some time back of New York stock opening hours pushed by an hour. Does this mean that Forex opening hours has also been pushed by an hour? No, this doesn't impact the Forex opening hours. Majorly affects the stock markets as well as commodities markets. So in Kenyan time, we usually witness the New York Open at around 4:30 p.m. But then since last Sunday, now we are seeing the stock market opening an hour later. So the kind of volatility you are seeing at 4:30 is now happening at 5:30. So it also affects economic announcements. For instance, in the past couple of months, the FOMC interest rate decision was happening at 9 p.m. But now today it will be happening at 10 p.m. because they adjusted by 1 hour forward. So checking the other questions. All right. So we also try to do some nuggets on these sessions. So if there was one chart you are really focused on today, which chart would that be today, Nadia?
Sorry, Rufus, what was that? If I expect a chart?
No, if there's one chart that looks really interesting for you to trade today, which one would it be?
Today I'm watching gold.
Awesome, awesome.
I would like to
Um,
see if prices are going to break the 2,650 handle again to the low side, or are prices going to be supported by the rate cut?
awesome. I think we have answered all the questions because mainly I'm seeing DXY, gold, Euro USD. So one last question here from Joseph. Do you see the Nasdaq continue with bull run, keeping in mind today Fed to cut rates by 25 basis points? From what we have been seeing since the September rate cut, it seems like the market is taking the rate cuts quite positively. And at the same time, from what we have seen from the earnings season, the top companies have really done well. We saw Meta doing really well, Tesla with better than expected revenues and earnings. Same thing with Google, Amazon. So the likely outcome of a rate cut would be more positive impact in stocks. However, based on the market reaction yesterday after the Trump win, we saw more activity happening in more American companies than these tech companies that have to have a global footprint. So we might be seeing some form of rotation as investors move back into Russell 2000, Dow Jones stocks compared to SP 500 and Nasdaq stocks. I hope that answers your question.
Thank you guys
So
for hosting me today. I'm afraid I must leave now. And it was a great session. Thank you, Rufus, for all these insightful questions and opinions. And hopefully, I will be joining you soon to discuss key market movements again.
we really do appreciate having you in this space. Thank you.
Thank you. Bye,
Awesome.
everyone.
So, for everyone in the space, in the live session, whether you are watching from X or YouTube, thank you for joining. We appreciate having you here. Thank you for your participation. If you'd like to register for an account, check the links in the description below. And if you're just starting your trading journey, make sure to watch the Novice to Pro series available on the FXPesa YouTube channel. On top of that, we have a new episode coming up on the Bullish Banter podcast. So make sure to check it out on all podcast platforms, including YouTube. Thank you, everyone, and enjoy the rest of your trading day.